Greetings, Dwayne, CFRN. I'm going to do a quick recap of the Concierge trade alerts. Now, I know I always say we're going to do a quick recap, and then it turns into a 45-minute quasi-training session due to time limitations and the fact that it's been a long day and an awesome day, and I still have a partner's workshop to do tonight. I'm going to cut to the chase. If you want detail, the minutia, granular stuff, go watch the radio show video recap we record the radio show every day. Go watch that video. That baby is granular. Okay? All right. November, right here, the 8th. That's the Sunday night Globex Open. Now, all week long in the videos, you've been seeing last week's weekly trading zones because we have to keep this week's weekly trading zones for those who have paid for them. However, come Thursday, I have the partner's permission to share them with the rest of the world. And so these are this week's weekly trading zones that you're now looking at. Okay? So price opened at a zone 2090.91 on Sunday night, November the 8th. November the 6th was Friday. And so we made a move higher. We did not quite make it to the 2100 zone, 2100, 2101. In fact, the swing high was 97.75. So we, in fact, missed that by a couple points, okay? It happens. These are hourly candles. Price pulls back down to the 90.91 weekly zone where we consolidate for 1, 2, 3, 4, 5 hours. Now, I have the CFMA1 on this chart. I was using it for training purposes today during the after show, but I'm going to go ahead and pull it off right now because I don't want it to get in the way of what I'm trying to show you. Overload you with too much stuff at one time. Okay? Because really the purpose of this is just to give you the Concierge trade alerts for today. All right? If you want to, again, go look at the radio show. I walked through how effective the zones have been all week. Consolidation is the most likely thing to happen when price hits a zone. After that is rejection. After that is what we call a hot knife through butter. That's where on an hourly chart, price just slices through it like it wasn't even there. Did that happen here? No. See? Over about an hour's period of time. This is an hourly candle. This is an hourly candle. If we go down to a smaller time frame, we'll see the back and forth, back and forth. Okay? Now, we had three things going on in the S&P today. We had the free trade. Guess I might as well go ahead and talk about that. CFRN.net/free Emini trades. You can go there, you can sign up, and you can get these trades absolutely free. I publish at least one a week for you. Okay? The last free trade was on the Russell. That came out Sunday night. That trade dropped 18 points. Today's free trade was on the S&P. That trade dropped from 2047 down to 2039.50. That was free. All right. The Concierge trade alert for the S&P 500 emailed out last night at 11:30 p.m. Eastern. Don't confuse the Concierge alerts with the one trade a days. The one trade a days are published at 10:30 a.m. Eastern after the Wall Street Open, after the 10 a.m. news comes out. Once the market has had a chance to digest all of that and settle down, that's when we put out the one trade a day for 8 different markets. The same 8 that you see here. The difference is the Concierge alerts, they are out before the London Open so that you can take advantage of that activity. out before the Wall Street open, so you can take advantage of that activity. And whatever economic news release comes out at 10 a.m. if you happen to be a news trader. Short below 2070. Okay? Here's 2070 right there. Guess I forgot to write that down. Alert. Now, when we say consider being short below 2070, that means get short if you're going to follow the alert at 2069.75. Below 2070 is 2069.75. Above 2070 would be 2070 and a quarter. Okay, it's one tick higher or lower depending on if it's a long or a short trade in the corresponding market. Now, the first trade of the day on the S&P was a stop out. Second trade of the day was worth 4.5 points. That's what the market made available. Now, look where it dropped. It dropped right into the waiting arms of the weekly trading zone, 66.67. We expect weekly trading zones when price is coming down. Leg, retrace, leg, retrace, leg. We expect it to be support. When price is rising, we expect it to be resistance. In this case, we overshot it a little bit. Okay? So, on the big move down, now I tallied it up earlier today, and it was 25 points. It's probably changed now. We're down to 41.50. So, let's see, this 70 minus 41.50. What do we got? I could probably do it in my head, but I'm tired. 70 minus 41.50 equals 28.5. So in the S&P 500, our trade today was worth 28.5 points. Now, that's what the market made available. I dare say no one got out at the exact swing low. And we don't know that the low is in. This trade remains valid until the alerts come out tonight. Same thing with the one trade a day. They're published at 10:30 a.m., but they're valid until the next morning at 10:30 a.m. Important prices, important areas are almost always tested. We can see it here, here, and here. The third one was what they call a doozy, and it took a real drop. Now this 2052 here, that happens to be today's one trade a day. I'm going to do a separate video for the one trade a days, but it might be confusing since it's sitting there. I might as well go ahead and tell you. If you are subscribed to the one trade a day, and the S&P is one of the markets that you chose, you had an opportunity to be short the S&P at 2052 based on the alert. Okay? So, stop out, 4.5 points, 28.5 points. The free trade, which got you short at 2047, and the one trade a day. All right. Next on the agenda, Dow, short below 17,630. I'll say this and just say it once. When I sit down to do the alerts, whether it's the Concierge trade alerts or the one trade a day, I, like every other trader, have an opinion. I have a bias. I've had to work very hard to learn how to fold that up, put it in my back pocket, and not let it color the work I do when I put these trades together for you. No matter how convinced I am the market's going to fall or rise today, after I do the trade that comes easy or simply, because that's where I think the market's headed, I then spin my ball cap around, point the brim in the other direction, and do the exact same work, exact same math, same calculations, and I hand you a trade going in the direction that I don't really think the market's going. This way, I sleep well knowing that no matter what the market decides to do, I've done my best work, and you're covered either way. The Dow dropped from 7,630. That was the entry we emailed out last night at 11:30 p.m. Eastern, down to a swing low of 17,391, and the last time I calculated it, and I believe that number is still correct, 239 points. That's how far the market fell. The Dow pays $5 per point. If you're trading the 2420 blueprint, your daily goal is $100 per contract per day. So you would need 20 points to make the $100. The market offered 239. Next, we have the Russell, short below 1173. Here's the Russell. There's 1173. 22-point drop. The Russell pays $100 per point. Basically, we went from zone to zone. 22 points times $100 per point is $2,200 per contract. That's what the market made available. If you're trading the 2420 blueprint, all you need is 1 point and you're done for the day. Crude oil. Long above 43.40, short below 42.90. In crude oil today, we had some incredible trading again. 42.90 down to 41.90. That's $1. When the price of a barrel of crude oil drops $1, from 42.90 to 41.90, as a futures trader, that's worth $1,000 per contract. I'll say it again, just for dramatic effect. Now, let me show you the margin that's required for you to participate in that. Just real quick. It'll go to energy, energy, energy. GCL is what we trade, $2,500 per contract. That's the margin required to place the trade. We only risk 8 ticks, $80 per contract. This thing dropped $1,000. Important prices, important areas are almost always tested. We came within a few ticks of this thing qualifying for us to drop another $1,000 per contract. Some savvy traders probably grabbed a hold of it anyway, but based upon the rules and the 2420 blueprint and all that, well, this is a work of art, the trade. Okay? Not everybody's as passionate about the markets as we are, but we are. Okay, after crude is the euro. 6E, long above 107.90, short below 107.60. Two-sided action. The first move was to the downside, 65 ticks at $12.50 per tick. At $12.50 per tick, you only need 8 ticks to make $100 per contract per day. The market, in its infinite kindness, made 65 ticks available. Then we triggered on the long side, 23 ticks. Back to the short side, 10 ticks. Back to the long side, 18 ticks. And the final rally of the day produced a 45-tick opportunity. But again, a lot of big numbers. If you are going to graduate in 24 months as a 20-contract trader by following the 2420 blueprint, what you needed from today was 8 ticks. Soybeans never triggered. Our dollar trade is now positioned. We may get triggered into it tomorrow. It qualified today, so maybe tomorrow, maybe the next day, we get triggered. More details available on the radio show video if you want to check that out. Okay. Next would be gold. Long above 1094, short below 1084. We went from 1084 down to 1074. That's $1,000 per contract. That was the potential. That's what the market made available. We gave you the entry. This is what the market did. The only other question is, what did you do? Important prices, important areas are almost always tested. And here's the test. This time we dropped $700 per contract. The final trade. Bonds, short below 151.17 or long. Let's look at the long side of bonds, 152.16. Remember, bonds were closed half a day yesterday because of Veterans Holiday. Long above 152.16, 687.50 per contract. And yes, important prices, important areas are almost always tested. Price runs up, runs back down, touches the trigger, off it goes again. Okay? All in all, what can I say? It was an awesome, awesome day in the markets. So that concludes the Concierge Trade Alert recap for this 12th day of November 2015. And I'll be back shortly with a recap of the one trade a day trades. We trade the same 8 markets. The only difference, the Concierge alerts come out at night. They're emailed to you. The one trade a days, same markets, are published at 10:30 a.m. Eastern on a super secret website. When you subscribe, what will happen is you'll be given a user name and password to log into the markets that you have subscribed to. Okay? All right, that's it. We did it in 17 minutes. I look forward to seeing you tomorrow morning in the live trading room. In fact, I think I'm going to send everybody on our mailing list an invitation to come and hang out with us for Open House Friday tomorrow in the live trading room. If you're already a partner, you can ignore it. If you're not a partner and you want to come hang with us, we'd love to have you. All right? Take care. Have a great evening.